Okay, good morning or good afternoon, everyone. Wherever you're watching it's live, or maybe you will watch it later. My name is Artur Davydenko. I'm representing Flyer One Ventures, which is the venture capital fund. And just a few words about me before we start. I was working in gaming developing industry since 2015, starting in Kefir, Eva, and Legendary at first as project manager, working with operations, production, and all this stuff. Then I was working on the marketing and business development side in Legendary and at Google as well. At the moment, I'm working at Flyrun Ventures, which is the venture capital fund, and also I helping my old friends from Playrix and Legendary with the mobile game development startup, uh, focusing on finance and strategy. So just the last piece of the introduction is about Flyrun Ventures. So we're investing in gaming products. We are 3+ years venture capital fund with 52 plus investments in early stage startups. We usually focus on CEE, Eastern Europe, and in early stages we invest including gaming products, gaming services, gaming software, and game developers as well. So I would be glad to gather the experience from my personal career, from investment strategy of Flyer One, and share with you what I would recommend to you to do or not to do while you pitch into gaming investor. It might be the Flyer One, or it might be some other investors. So I did show this presentation to some of my friends from other VCs. So it should be okay for them as well. And right to the beginning, what you should do, as I see it, is target the right investor for you, for your idea, or for your current existing gaming startup. And what I mean by right investor, I mean that you can use InvestGame, for example. I will recommend this platform to find the investor which already invested in similar companies, and it should be okay for this investor to invest in your company as well. So it's right that simple. And on this side, in this list, you can see that which is more stable, more reliable to find a big venture capital fund with the history, with the reputation. And usually I would categorize or divide the right match for you as a startup into 3 categories. The first would be the angel investor, which you can see on the left. It would be some business angels who can invest something like $100,000 or 200, and they usually invest through friends or colleagues, close colleagues of them. So it shouldn't be the big investment check, but it could be a good start for a small team. And then going to the right, we on venture capital category, which, for example, Flyer One Ventures is. So we usually focus on industries and stages. For example, we invest in IT and gaming on early stages, and we invest more than 100K. It's usually something like $500,000. And investing this sum of money, we usually expect to have something like 10, 15, or 20 percentages of the shares of the future business. But some funds might ask for a little bit more if they invest the bigger sum into your gaming startup. And the last big category would be a strategic investor. It's not a venture capital fund. It's not an angel investor. So it's usually something like Voodoo, Tencent, Playrix, Peak, Rolik, if we're talking about Turkey, or Dream Games, deciding to invest into particular game product or into particular team because they think that it should be a good match between their core business and your possible successful business. And usually they invest bigger amounts to have the majority or the controlling percentage of your company, which should be more than 51%. And as the small example of the strategic investor, you could also think about publisher. They usually invest a smaller amount at the first, but they usually tend to then acquire the team, so invest more and acquire more than 51% of the company. And knowing your strategy, knowing your plans, knowing your segment in gaming, or your character as a person, as a businessman, you can choose one of the categories for you. That would be at first to find the fund, at second categorize to find an investor, at second to categorize this investor by the strategy they're using, angel investor, venture capital fund, or strategic investor. And then when you have top 5, top 10 right investors for you, for your gaming company, we could go deeper to analyze the particular investor. What should you do? As I see it, what I recommend to do when you look at the investor profile. You can look at the investor profile at Crunchbase or at their website, where they usually, and they should, share the managing team, so who runs the funds, and what the existing portfolio. They usually even have the button portfolio. What it means, it's which company they already invested in. And I would recommend to find something similar if you're making casual puzzles, to find something casual, and then it should be a really good sign. If it's a new fund, but you see the great managing team, I would recommend to look where they worked before. For example, if they worked at Peak, at Rolik, at Dream Games, or it's some big Turkish company and you want some local big funds, that might be a good sign as well. The geography, what I do mean by geography is if you see that they invest only in Turkish company, for example, and you are not a Turkish company, I would not prioritize them, because they can have a strategy to invest only in local companies. It's possible. If they invest in different companies, which you could see going by their website, it should be good, but it's good to check it. An investment stage is, for example, we invest in early startups. So when the startup have a prototype with the retention day one, for example, if we're talking about games, it's good for us to start talking. And they should also have a team, of course, a core team. But some funds and some venture capital investors, they tend to invest only after you have a soft launch, for example, or a global launch, and they want to help you to scale. So they usually tend to share this in the name of late seed or Series A, which is when you want to grow. You don't want to build something from the scratch. You want to grow. You already built it. And that would be really important, because they would not talk to you if you're too early or too late for them to invest in. And you always can check it on the Crunchbase when you see the readiness of the game and the size of the company this investor invested in. The average investment size is how much they invest into gaming companies. You also can check it on the Crunchbase. My main portfolio companies are listed there. If they invest less that you wanted, it would be more difficult to have an agreement. If they invest much more that you needed, it's probably that they invest on the later stages for the bigger teams. It would be the same. They would not invest in you if you're too early to invest in. But it's the better if they have the bigger sum of money to invest in. But still, I would target the investor that invest particularly the average check that you want. And the last but not the least, it's smart money, which I call additional values. For example, if this management team is really great in marketing, you see the experience in LinkedIn and they done it, and you can ask some of your friends, do they know them? And you lack of marketing. So you're really great in production, but you need to be clear, and you need to understand what is your weaknesses, because market will define it really soon. And I would find and I would look for the guys who are really strong in your weaknesses. They could help with this, and uh, they would be ready for this. If it's a big fund, like 2 or 3 years of experience, they already helped a lot of companies. So when you done this, I would then recommend you to do a particular steps as you're talking to this investor. I would be happy as an investor if you at first send to me a general one pager, which I'll describe later, and then after I share that it's interesting, you would prepare a big pitch deck with all the details, and after that we could talk if it's a match for us for the fund. We could talk about P&L, about finance. We could talk about marketing. We could talk about recommendations. I would ask you to provide, and then of course we could talk about offer. And today I would go deep to each of these stages, and then we could have some time for your questions, of course. The investment one pager. It's really often happens in non-gaming investments, and I would recommend you to use it. Experience, because for me it's really useful. So you have one A4 page PDF, of course, which you attach to the email. In this email, you write something like 2 or 3 questions. And in this one page, in this PDF, you share the main idea of the game and the link of the video or of the APK, which you could share of this game. And the investor can categorize, is it casual, is it hyper casual, mid-core, and maybe they have the strategy to invest only in casual because they have an experience. Then the team and previous launched games. So the team, the main core team, 3-5 people, and maybe the amount of people you all also have, but not with details. And the previous launched games, so your results, your achievements, not like 10 plus years in gaming industry. A lot of people have 10 plus years in gaming industry. It doesn't mean that they can have run a business. The third is market size, and it's growing during the last 3 years. As we speaking at 2022, it would be this year. So what market are you targeting? What is the segment? Is it casual idle? Is it core MOBA? What it is? Is it the mobile platform? And what would be the growth during the last 3 years? So are you targeting the growing market, or are you targeting the dying market? I would target the first, of course. And it would be a good check for you as well. Because if it's growing, you have the demand, people want to play, it's more reliable to invest your time and money of investors. And if you have competitors, and you should have competitors, because it's more reliable to go at the market when you have 3-5 competitors that are already making money, and you can eat some of their shares, of their market shares, and some of their revenue. And you should target it and you should share it. And the last piece, of course, which is in some cases missing, is investment asks, how many money do you want? And your contact, your WhatsApp, your email. And it takes like 1 minute, if it's a good one pager with numbers, it takes 1 minute to analyze it, and it takes 30 seconds to answer. Yes, it's interesting. Please send me the pitch deck. And as you got this answer, and you will have a higher conversion to this answer because you just save a lot of time for investor, they might ask you for investment pitch deck. What I would describe as a great presentation, pitch deck presentation. As I see, you have 3 must-have things to do, and then 2 great things which could highlight you. Must-have things. It's of course structure, which I will share later. Metrics, so it's numbers, you data-driven. And then offer and call to action. So what do you want? Money, smart money, what values do you want to the table from the investor? Is it marketing? Is it hiring? What do you lack of? And then if you can do it, if you can highlight your business from the other, I would have storytelling. So you have some like narrative in your presentation, why you decided to run a business, why it is important for you to make games and not like something more similar, it would be more beautiful, it would be more engaging. We're all people, we all like stories. And then actionable subject lines, for example, a great presentation contains, as I see it, you can understand these words like in 2 seconds, and it's great. So I don't need to like look at the slide, understand what is the thing, what is the sense, what do you want to say, and you will have the higher conversion of your presentation into the answer that you wanna we wanna talk to you. So it's my opinion, of course. If we go with the structure, I would use this structure. The first slide is where you describe your company, so I could put it somewhere in CRM or something like this. And then the date, so it's a fresh presentation, it's not 3 months ago. And then the founders team, where you can share the more detailed, comparing to one pager, you can share the more detailed specialties. So you could describe what have you done, like 3 art direction projects, and then you can share the experience. So you have a lot of experience, and then you can share the context. If I'm talking about experience, I'm talking about years and projects. After the founders team, you could have a bigger core team if it's, for example, match-free game or like 4X strategy, or you could have just founders team and a hiring plan. So what people do you want to hire, and some big part of your investments ask would be for hiring, and where would you like to hire these people. So maybe if you have some companies you really sure that you can headhunting, I would put it to the table, because it's not like surnames and names, it's just companies. Then the game demo, of course, and if you have metrics, of course, share it. So if you have classic retention, day 1 to day 30, share it. If you have playtime of day 1, which describes your game as an engagement product, of course, share it. And then the last piece, it's not most important, but if you have the first days paying users share, of course, share it. So you not only retain and engage players, but you also monetize them. But usually it comes later, but you can have these metrics, of course, share it, and share the traction. So if you implemented a few different versions and you increased retention, playtime, or paying user shares, of course, share it, because it would show, and you would not need to tell it and spend time. It would just show that you already went into right direction, and investor already saved some time and can invest now or a little bit later. And as you, of course, thinking about the market, you have not only competitors, which is great, but you have your USP. For example, if you go into the match free, just with classic match free, like meta game, match free, not even like collapse puzzles, which would be something more fresh, then it would be a really difficult story. But if you have some USP for your game, not like a match free, but any game, of course, share it and show it. If you have a screenshot or a concept art, it's really important, because gaming is entertainment. You're trying to find a different angle to something that already working. Then, as you shared your USP, which is the brief, then you could share the product roadmap, which is the plan, more detailed plan. I would recommend you to share the product roadmap at first for 3 months, and if you're sure, for 6 months, not something bigger, because in reality it would not be like this. You would not have a really great working plan for 1 year if you're a startup. At most 6 months, if you're lucky and you are a great manager. 3 months, much more like realistic. 6 months is a good tactic plan. Product roadmap, in terms of like what would I expect to see, it is of course features for retention, engagement, and monetization, and that would be the product roadmap in terms of what inside of it. Marketing plan, which supports the later stages of product roadmap, would be how do you test your beta, how do you start your soft launch, and how do you scale your global launch, and then after the first month, how do you scale your live game. We would have a detailed slide a little bit later. An investment proposal, as we said, is the amount of money and why do you want such money and how long can you pay salaries to your whole team, what would be the team burn rate. And POC, point of contact, would be like the CEO or something from the core founders team, which we should talk about this presentation. Going further, the P&L, which I mentioned before, would be the brief of your roadmap and marketing planning in numbers. So you have hiring plan, you have product roadmap, and you have marketing plan. Hiring is the first big piece of your costs, and at like first months it would be the main cost for your team. Then product roadmap is you have milestones in product roadmap, and you can highlight them in your P&L, so investor will understand, okay, when will they have the beta and when will they start the soft launch. Then the marketing plan, which of course includes UA, user acquisition costs, will be the second big piece of your costs, which would be important, and of course it would be later. It would be up to the right in this template, and I shared the template, and I'm hope that Mobidictum will share the presentation and all the links you can see in this slide, and you can use it. You can just put your numbers. After you have the finance plan of your company, which will probably be the most piece of your investment ask, then the last piece of your investment ask would be the marketing. And to do this, you need a marketing strategy. What do I mean by the marketing strategy? What I would advise you to do to include into your market strategy. The team, of course, and the hiring, as we said. The market, what I mean by market is the volumes of downloads and volumes of paying target audience, which you can always do in App Magic or in some free services. So when you see the RPD, if you see the downloads, you can just divide downloads by RPD and have some understanding of paying target audience. And you just need millions per month. You need tens of millions of downloads per month for whole segment, for all your big competitors. And you need at least million paying target audience in all geos for your segment. Why do you need it? Because then it's a big segment. You can eat some piece of it. And the geo, it's just the good thing to understand. Is it like the poor Asian, China market, and you need expertise to do that, or it's like a global United States first market with Japan or Europe the following? If you understand it, you understand the localization, then you understand the competitors in the particular geographies, and you can like focus on these geographies. As you focus on geographies and on the market, you then would need to have a user acquisition UA and promotion PR strategy, which usually, if we're talking about mobile gaming, it's about strategies. So you have the social channels, Facebook, Google, Snapchat, TikTok, and then you have ad networks, which would be much more later. So at first you will have the main work is to work about on creatives. To work on creatives is to divide creatives into different USPs of your games and to create videos of that. It's just that simple, but the most difficult part is to do it a lot and to iterate and to test a lot. And for that, for the beta, for the start of your soft launch, you need a lot of creatives. You need to hire a video designer and you need money to test it. It's thousands of dollars, but it's still money. Stages in your strategy would be, as I mentioned, beta, soft launch, and scaling. The most difficult, of course, is beta and soft launch. You can fail on the beta, or you can fail and then understand how to change it. You will pause the marketing and then you will resume it as you need it to like check the different beta, the different hypothesis. Soft launch, it can be long. It's not 2 months anymore, so it can be 6, 7, 8 months, and you need not a lot of money to do that in terms of marketing, but you still will need to pay people to make games. And then if it goes well, if soft launch will be finished, you need platform strategy. So platforms, I mean by platforms, of course, Google Play, Apple App Store, Huawei at first. If you're making PC games, it would be Steam at first. So you need App Store optimization, which usually includes App Store creatives, App Store keywords, and description. You just look at the top competitors, you adapt it to a game, and that's it. Please don't do anything like new and fresh. It will be later. Just put your USP as the only fresh and new thing, and all others should be like you have seen from top competitors. Localization, if you have not only the United States, but for example, Japan, and of course you would need to localize a game to Japan. It would affect install rate in all the metrics a lot, and platform would like to see it. And platform pitch, which is the result of your market plan, your UA and PR strategy, your product roadmap, your App Store optimization, your localization, and that's all these pieces are included into one platform pitch, which you share with the Google Play and Apple App Store BD Manager. You can find those BD Manager in LinkedIn. If you have a great pitch, and I already shared a lot on the pitching, you could have an answer from them. All they just could find you by themselves. If you're growing during the soft launch, of course, they see it. And the last piece, which would be a result of the previous 4 points, would be budgeting. The main thing about budgeting is, of course, salaries, marketing tests, and the pivot scenario. So the pivot scenario would show that you are realistic about gaming business. It could go wrong on some stages. And how much money would you need if it goes wrong? And what could go wrong? It would be great if you would describe it in your P&L as well. So as we go in further, if your investor answered you after you shared the pitch deck, you talked about all this strategy of your growth, and before that you talked about product roadmap, about your team, and it's interesting, then good investors would ask for recommendations. Why? Because we would like to check, are we seeing all the important stuff? Do we understand all the weaknesses? We don't know each other for 5 years, and we would like to talk to people who knew you and who know you for a lot of years. And we would ask you, and you could provide it if you want to do it in advance. You could provide 3-5 people which could share a big amount of experience working with you and why they would recommend you as the businessman or businesswoman. So offer to the investor persons who are B or C level, so they managers or top managers, and they should be reliable, and prepare them to share your personal strengths, weaknesses, opportunities, and to share them as I would call, or I will write them just to save my time and their time. That would be great. That would help to increase your chance to take investment from the investor if you have a great recommendations. After you had this stage, then the verbal, informal interest of the investor would be an offer. It could be an email, it could be a call, where they share that they interested and they would like to proceed with the so-called due diligence, which would mean finance and legal research of you and your company. Are you reliable? Is it okay to invest in you? If it's okay, and if they didn't find something risky for them, or you would be declined, because you found another investor. Then they would share a term sheet or a safe. So it's just the different documents for different type of investments, but it's a formal interest. If you sign it and investors sign it, then you would talk about bank opening, legal advisors, and about the investment transaction. That would be the end. But to start it, you need something to sign, so they will understand that you chose them. And as you sign it, you usually shouldn't talk to other investors at all. So please think about this stage before you sign term sheet or safe. And that would be the good result of all your work that you done before using my recommendations or recommendations of my colleagues. And of course, it's a work. It's a fundraising work. It takes time. So I would like to save your time and time of investments to make it easier as much as I can. Also, there are a lot of great and clever people in gaming industry, and I would highlight just a few of them. Also share their experience. So, elite game developers, it's a blog, a website, and a podcast of the experienced game business developer, and he shares a lot of templates and a lot of podcast interviews with different successful businessmen and businesswomen. So I would learn from them. Then the Founders Institute, it's just the biggest early stage investment company which share a lot of document templates. So you could always check, okay, this investor, they sent me this document, and I see in Founders Institute or in Elite Game Developers that usually it's something different. You can ask and you can learn and not make mistake by working with some unreliable investor. Y Combinator, it's like the biggest incubator for startups in the United States. They just have a lot of free video about how to launch a business, hire people, work in uncertainty, and I see it's useful for me as well. So I would share it with you. The last piece of useful links from great and clever people would be on marketing, as I shared a lot on marketing. You have the English performance marketing course, which I did attend, and I recommend you. It's a really, really strong course for marketing. And then you have the forum, like the website where people sharing the problems and answers, which called Quantmar. It's the forum for marketers. And you would find most of the questions you have if you put it right into the search. So I would recommend you. All the experienced UA directors use this forum, so I would recommend it as well. And that would be it. My name is Artur. I'm representing Flyer One Ventures Fund. I hope that I helped you in some way. And if you have any questions for me, I would be glad to ask them. So I see the question from HipMet and from Scope Games, and I would pronunciate it and answer, so it would be easier for all of us. How to determine the startup valuation on pre-seed and seed investment? For example, when pitching VCs, how to approach on the slide? It's a great question. Short answer, I would not put any valuation if you are pre-seed, because it's as low as possible, and you could have a bigger valuation from the fund because they trust in you and they can give you the evaluation. But if I would share the benchmark, if you don't have any revenue, you are early seed or pre-seed, you would not have valuation more than 3 million pre-money. It would be just the benchmark which most of the early VC investors are using. In some cases, 4 million if you have a great, really, really experienced team. So it's something like from 2 to 4 millions. And why that? It's just an empirical experience. So if you raise, for example, 1 million and your valuation is 3 million, so you will lost more than 30%, which is a lot. So usually you would raise something like 500K and you would share something like 10 to 15% of your shares, which is great. Then you would go to soft launch, have some revenue, and then you can have a higher valuation. It's a different presentation about the multiplicators and the finance valuation of the revenue of the gaming startup. But usually, long story short, you multiply your yearly revenue by 3, and that would be your valuation. It's a really rough, really rough valuation. But as you don't have it, you would have something like from 2 to 4 million pre-money. Damla, hello. Cupola Games. How important are brand values such as company logo, name for a new team during the investment process? Name, of course, is important because I could at first put it into my CRM to not forget about you, sorry, and then to put it into LinkedIn and to look at all of you to find you more quick, and then to ask from other investors, have they heard about it? If you like a new team. So it would be important. Logo type is not important at all, so you cannot spend any time on it. Thanks for your question and thank you for the session, Mobidictum. It's a pleasure to be there and good luck with other sessions. Have a good day, stay safe, and be well.